with me is co-founder and chairman of Metro Bank, one of several new entrants to the British banking scene. Thank you very much indeed for joining me here this morning, and especially on a morning where there are such momentous changes have taken place.
Quite extraordinary.
Isn't it?
Yeah.
I mean, I think something that none of us could have predicted before this election. We were looking at lots of outcomes. The idea that Vince Cable was going to be in charge of banks and that George Osborne was going to be the Chancellor is something that none of us could have predicted.
It's quite extraordinary, and it's very interesting because, of course, the two of them have very different views. Osborne wanted to break up the FSA. Cable was less persuaded by that argument. But Cable wants to see the end of casino banking. He wants to see banks broken up into traditional, old-fashioned, narrow banks and then what he would call the investment or casino banks. And I think Osborne's not quite so keen on that idea, so as I think we're going to see many going forward, it's the first of a number of fudges where there's going to be a commission. A year's time it'll report back. I think the really interesting thing is that Osborne wants to do it with international consent. Cable wants to do it unilaterally, so we'll have to wait and see. And
so here you are launching Metro Bank into this historically, perhaps forever changed political landscape. How does that feel?
Well, I feel like we've got a bit of a mandate from the people to change banking in the UK. There is absolutely a requirement to change banking, both commercially and from a consumer perspective. We will, of course, be both retail and commercial banking. Commercial banking's really suffered in the UK as the banks have had to deleverage their balance sheet. Quite simply, they've had less to lend. So the idea that there's going to be more competition on the high street, more choice for businesses as well as consumers, we think is a really good thing.
Now, the idea that that investment banking and retail banking will be split seems to be something, obviously, that this is going to be looked at very closely under this government. Does that suit you?
Well, we are an old-fashioned narrow bank. We believe in taking in deposits and lending them to our customers. None of this third-party lending, none of the things that led to the terrible mortgage-backed securities affair, which almost brought down the banking system. We're banking the way that it should be, and we think that this is really good for us. All of this talk about massive bonuses really applies to the investment banks. It doesn't apply to the consumer banking sector. But it does need shaking up, and hopefully we're going to be the people to do that.
Now, what about liquidity? Because you're going to be a small bank. There is an idea that banks are going to be required to hold more capital and also to lend more to small businesses. How does a small bank like you cope with that?
Well, that is, of course, a bit of an oxymoron. That's saying you've got to hold more capital and you've got to lend more capital. Yeah. But we've seen governments make statements like this in the past. We start with 75 million, which enables us to build up to around about 20 stores. We call them stores because we think of ourselves as a retailer over the course of the next 3 years. In 3 years...
All in London, is this the plan? Or
we're starting in London because we've got to start somewhere. We think London is the centre of the UK, big population, big opportunity. We certainly want to take Metro Bank out into the rest of the UK because we think consumers and businesses elsewhere deserve better banking. But it'll take us a little while to do that.
We've seen interbank rates also soaring at the moment as banks are concerned about risk. Are you concerned that people won't want to lend to you?
Well, hopefully we'll be lending to other people. But our capital comes through two ways. It comes through the capital on our balance sheet from our shareholders, which is 75 million, and the deposits that we take in from consumers. And over a period of time, as we need more capital, we'll go to the markets. We've stated publicly that by year 3, should we hit our growth plans, which are quite ambitious, we would expect to raise another roughly 260 million, probably through an IPO.
And no chance that you'd be looking at buying branches that the government might be selling from Lloyds and RBS?
You kind of wonder why they have to sell them in the first place. The answer is no, we won't, because culturally you can't change them. Ours is a new and very, very different model of banking, and to make it work you have to build it from the ground up. It's about the people, it's about having great sites, it's about giving customers a great experience, and you can't do this by buying somebody else's, quite frankly, failed businesses.
The banking sector in general is going to be looking for certainty in these uncertain times. The coalition hasn't yet, obviously extremely early days, given us a very clear path of what it's going to do. Is that what the markets and the banking sector are going to be looking for?
Well, it's very interesting. I was watching you a little earlier talking about the markets this morning, and they seem to be a little damper than I would have expected, given in effect we now have a government with a clear majority, a stable period of, they're talking about up to, I think, May the 7th in 5 years' time. So I think we'd get some, I would have expected the markets to respond a little more positively to it. We need to get a clearer sense from the incoming administration as to what they want from banks. But we have a pretty clear steer from, as we said, Cable, Osborne earlier. They want more capital, they want more liquidity. The FSA set new limits. The existing banks aren't able to meet them yet. We meet them from day one.